Welcome back to another video of the Chocolate Stocks, where we discuss trading strategy, due diligence, and technical analysis on individual stocks, as well as the market in general. So if this is your first time at the channel, please do me a favor, hit that like and subscribe button. I'm on a mission for 1,000 subscribers. It doesn't hurt you, but it sure helps us. Last but not least, I am not a financial advisor, and this is not financial advice. Let's get into the video, guys. And guys, what a week has this been for the stock market. Our journey has been quite exhausting, to say the least. I believe this week, especially from the people I talk to who are taking this journey with us, and just seeing all of these red days have just kind of beat people down and discourage, especially new investors. But I just want to tell you guys, just stay the course. Stay the course. I promise you that better days are ahead. If you took advantage of this opportunity to get or pivot into plays that are guaranteed to, at least double up or get you a nice return on your investment, this was the opportunity to do so. You had one last opportunity today, but I think the market is starting to turn around, and we're going to talk about the market and review and see what we can expect for next week. But guys, I just want to do an overview of this week in the market, so we can just kind of digest how plays have moved, how the market has moved, things you may not have thought about. This is the day to kind of just sit back and analyze, okay, what was moving, why was my plays doing this, and why some other markets was moving. There's always a bull market somewhere, so you got to kind of figure that out. And I do have some things I identified that we'll talk about later on in the video, but let's look at the S&P 500. So I pulled it up. This is the 5-day chart. So this is the last 5 trading days. Here's today. Let's look at the 1-day chart, and I'll go back to the 5. So as you see, we opened at around 391. We finished high, big green day actually, at 395 for the day. A lot of bullish action towards the last hour or so. Now I would say more like 30 minutes of the trading day. Last 30 minutes of the trading day, just nice big green candles to right off the close. Big green candle right here. Yeah, so that's a lot of bullish momentum towards, at least I would say almost an eighth of, a little more, maybe about a fifth of the trading day. From here on, it's probably about 1/5 of real bullish action. But if you remember the video from yesterday, I told you about the W-shaped recovery pattern. Here's another W pattern right here. So I want you guys to pick up on that, because we're gonna look to identify these double bottoms that happen in the market, and that can give us a good indicator on when we might like to enter our trades, because that's going to give us a good indicator of when we're going to probably see some bullish momentum. So I'm going to keep my eye out for things like that. It's another one of those double bottoms right here before a bull run. So I'm starting to pick up on that, and I'm just passing it along, so maybe you can identify that on your own. Let me go back a little bit more to the week view. And as you can see, we came out of this trend, this downward trend here, and now we're into an upward channel. So yeah, that is a trend reversal from what we've been doing for the week. So I do expect a bounce, but I don't let this little bullish action towards the end of the trading day fool you that we're going to actually start here around 395. Well, we may start there, but what I expect coming into Monday is us to come back right around, I would say right back to 392. I expect some type of pullback on Monday to come back to 392, just because it was a level of resistance. It's going to have to be tested as support. So again, guys, we're going to have to watch that 393 level going into Monday's trading day and see if we can respect that support line. And if so, then that can help us be on the road to recovery. Also, I want to look at this 90-day view, and I just want you to know that over the course of 90 days, this is what we really have to look forward to with our stocks. You know, so that was pretty much the last 90 days. I know that's a terrible line. That is a terrible line. But I'm just showing you just the uptrend. Just the uptrend in the last 90 days. In the last year, again, it's just an uptrend. It's just an uptrend. So don't get hung up so much on the day-to-day. Ever since the cliff drop off from COVID, what we don't really realize, especially investors that did not participate in the market prior to the pandemic, is that here's where we were at this time last year before everything fell off. We had the market has reached another new all-time high. Again, that was, in the grand scheme of things, what happened with COVID was just a major pullback before reaching this high. There's going to be some other pullbacks in the market. So what we do is learn from these lessons, is that once we get to a certain spot, we hit these price targets, don't be afraid to take your profits and let that sit. You don't have to spend that right away. Let it sit. Let it sit. If an opportunity comes, a good entry point, play some options, that's fine. But when we go along, we're going to wait on these pullbacks. We're going to wait on these big pullbacks, these W's. And preferably, if we can get one on each bounce, that will probably be a good way to do it. You know, half your money here, half your money there, but you can't time the market. So what I'll be looking for in a W-shaped recovery pattern is on the second dip is when you load up, because from the second dip, I think you get your best rate of return, rather than, you know, buying this dip and then seeing some recovery and then it dipping lower than where you got it in the first place, right? So that usually can happen. That usually can happen. So, but I think the better risk reward would probably be buying on the second dip, because you're buying right before the strength run come. Again, you can't time the market, but anywhere around that second dip. So if you see a big dip and then a little bit of recovery, once you start seeing another dip, that's when you should start looking for an entry point right around where that first dip was. Okay, guys? All right, so with that being said, let's look at our plays for the week. Inseego, ticker symbol INSG. Here are the closing prices for the week. Today it closed around $9.79 after hours. Okay, so guys, what was our sweet spot? Our sweet spot was under $10. Let's look at the chart for the week. INSG, Inseego. And again, guys, if you don't remember, in the last video we did get some great news about Inseego releasing, actually getting some FDA approval to operate new product lines in the United States and in Europe. Check the video from yesterday. We did talk about that, which is, I think, is going to be a catalyst for an uptrend for Inseego moving forward, that has already started in the last 2 trading days. Even though it's trading around $9, it found the bottom here at $8.90. That's if you got it right off the open on yesterday. and it's still trading underneath the channel I thought it would come to. Again, under $10 I feel is a good rate of return, because going to the 90-day chart, last 3 months, again guys, we can get back up here to 20. So everything from here, if you got in around this channel, is a double up. It's a double up from here, okay? And with that being said, check the other videos. The people who are, following this channel, the way we've been going week by week, we're taking profits at 20. All right, Palantir, PLTR, ticker symbol PLTR, trading at $22.57. Okay, guys, so Palantir, let's look at the chart. All right, so Palantir actually traded sideways for the most part today. Big dip, but returned right to just about where it opened. So yeah, again guys, this is another dip opportunity to get into this play. If we go back to what we discussed, what was the sweet spot under $24, we're still there. It came as low as $21.76. Let's look at the week. $21.02 was the low on yesterday, but again, we're looking at signs of a recovery based on a break from the downtrend. All right, so again, we looking at the price target for this play. We can get back to the 40s on this. All right, so if you've been following the channel, we're taking profits at 44. All right, let's look at the market in general for the winners for the week. Wells Fargo up 1% for the week. Bank of America 1% for the week. JP Morgan Chase, Citigroup, Coca-Cola up 4% for the week. AT&T up 1.88%. Verizon up 3%. Visa up 1.7%. Do you see a reoccurring theme here? The whole top row are all banking. It's all banking sector, okay? And then the bottom row is just pretty much your more stable, established, companies. So you need these type of plays in your portfolio. When we've been bleeding off all week, these plays have been gaining all week. The same plays have been gaining all week. So you want to think about having these in your portfolio. I know we like to go for the speculative stocks because those are the biggest risk to reward. But again, we got to have some long-term things. And these bank plays, especially these, I told you in previous videos, these are going to outperform the market. And so these are the plays that we need to start thinking about moving forward, as getting some entry points in here and using these banking plays as essentially our banks within the market, if you get what I'm saying. All right, so keep that in mind, guys. All right, so my moves for today, I didn't do much. I kind of sat on my hands for the most part. I saw another dip on MVIS. I did try to add a little bit more APTX. I finally got in. Charge point, I added a little bit more. Let's look at MVIS, because I am the most bullish on this play, and I really feel like it's going to run right back up. This has been my best candidate for the rinse and repeat. Today it found a bottom around $12, man. Look at this. You see that W? Reoccurring thing. You got it off that second bottom. You caught it right in the bounce. And that's really what you want to do for options. And I'm gonna do some more videos on options. When you want to time those option trades, you want to since we're in a W recovery pattern, you want to try to time it right here on that red candle, so that way you get the highest, implied volatility on your option trade. Other YouTubers ain't gonna tell you that, but just know we're going to start talking about that because we're going to find other ways to make money in this market. We're going to get the long investing down, and then we're going to find other ways and options to make money on these plays. All right, guys. Last but not least, YOLO stocks. YOLO stocks. And yeah, it was a pretty uneventful day. AMC. Let's look at them today. Started off with some promise and just bled off the rest of the day. Finished at 1024. All the $11 calls expired out the money. Looking at the 5-day chart. And I think it's kind of a result of the broader market. I know we had that big bounce yesterday to at least get us into this $10 channel, but again, look at the recurring thing, the double bottom, this W bounce here into the trading day on Wednesday, and another bounce off the open on the trading day yesterday. Again, guys, we gotta look for these double bounces. Gotta look for these double bounces. When you see them developing, you know it's probably a high opportunity, high probability trading opportunity. All right, let's look at GameStop GME. Finished at 181 today. Showed some promise right off the open. Popped up here to 218 and then just kind of bled off for the day and consolidated. But I do like being at this channel for future movements because seeing that we are respecting this 172 channel, this 172 to 194 channel, that gives us an opportunity to jump into the 194 to 213 channel. I think that's the next move up after this consolidation. Looking at the MACD, it's looking like we can try to find some consolidation, and the RSI is not testing oversold or overbought territory. So I think, guys, we're still in a good place. We're still in a good place for the stock. Again, it's people on the other side that want to win just as much as we do. Be patient. And that's all I got. I appreciate you sticking around for the whole video. If you like what you hear, if you want to support the channel, please hit that like and subscribe button. With that being said, enjoy your weekend. I'll be back Sunday with some brand new plays for the week that we're going to follow next week, and we're going to get ready for this bull run. Until then, enjoy your weekend, guys. Peace.